Yo, what's happening, home service homies and business nerds? Dan Plot, home CFO. Wow, easy for me to say. What the hell time is it tonight? Home service CFO coming at you on the home service happy hour. Welcome, guys. We got Josh Smith in the house. Is it Josh? Do you say is it ROC Health Sharing and ROC Financial Group? Is it ROC, or do you not give a damn?
I would say it's the latter of all of those. So take your pick.
That's my favorite. That's what people are like. Hey, should we call you Dan? Should we call you this? Should we call you that? I'm just like, sometimes it's this, sometimes it's that, sometimes it's dumbass. Clearly, I can hardly get through an intro, so who knows? That reminds me. That the problem is, I haven't opened a beer yet, and it is the home service happy hour. So, cheers.
Cheers.
What do you got over there? It looks like a nice bourbon or something. What you have?
Yeah, I mean, it's supposed to be an old fashioned, like a dark cherry old fashioned or something like that, but we're staying here at the Courtyard Hotel or Courtyard Marriott, and
whatever the bartender at the Marriott knew how to make.
Bartender, so but he was a very nice gentleman, so we'll give him that.
Yeah, comes with customer service. Tastes like there's some booze in it and something else. We'll call it an old fashioned. It's a new fashion. Let me do this. I gotta get. I'm gonna jump out on our feed here, guys, and just make sure that this baby is public. We're talking health insurance tonight. And Josh, this is no offense to you because I'm a bookkeeper, and a lot of times I talk about finance stuff, and so I'm well aware that what I talk about is normally super boring stuff. The minute you say insurance, I'm just like, oh my god, that's so boring. But health insurance, now like that, especially when it's workers' comp or general liability, like my buddy Corey comes on every once in a while, and I'm just like, Corey, thank God you're entertaining because this stuff bores the hell out of me. Like I need a storyteller in person. But health insurance is like a whole nother realm of goofiness, and it's so evolving right now that even myself, who hears the word insurance, is just like, oh, like it's painful hearing that word. Even myself, who's pained by the word insurance, is just like, oh, this is interesting stuff. So I'm excited to have you on and dig in. I'm going to make my little feed here public. Folks out there, as you guys are tuning in, drop a quick note. Josh just hit the wrong button and left. Well, Josh is coming back. Drop a note in here in the feed of what you have right now for health insurance. Where do you get your health insurance? I want to know. So I know there's a few people checking in. We'll have more people coming on. If you're live right now, drop us a note. What do you have your health insurance through? Is it, and Josh, you can correct me on the options, but are you buying it through the portal thing? Do you have it for your company? Do you have it through your spouse? Are you uninsured? Is that a thing? Can you be unhealth insured? That's probably a thing?
We've got a lot of folks who are uninsured.
Sometimes I feel like I should be uninsured. Like I'm rarely ill. Even when I am ill, I'm just like I'm not going in. I had food poisoning this weekend, and at one point I had the shakes. And I texted my wife. It was like 12:30 in the middle of the night, and I was just like, I am feeling so bad, and I'm like violently shaking. And the thought crossed my mind of like, man, should I go in? And I was like, hell no. And then I threw up, and and the shakes went away. So I felt better after that. So that was it. That was just all I had to go. But yeah, you guys drop a note in here. Let us know how you guys are insured. I want you to drop your questions in for Josh as we get going here. I'm gonna have Josh drop a little intro for us so we can get to know him a little bit better, and then we'll bombard him with all of our nerdy health insurance questions and all the things we don't understand about the system, which is pretty much everything. So Josh, we got ROC Health Sharing, ROC Financial Group, ROC Life, Liberty, and Taxes, and whatever else you got going on. Tell us, I'm sure that wasn't the thing you've been doing since birth. So tell us how the hell you got here.
Well, no, it's really been my passion since birth is healthcare in general. Sarcasm a little bit there. So no, my background actually has been in the financial services world. So worked for big banks like Capital One and HSBC and quite a few others. ended my corporate career with a company called Ferguson, which is a wholesale plumbing distributor. So ended my corporate career selling toilets.
There you go.
And
There you go. I got really familiar with my toilet this last weekend with that food poisoning. Like 2 days of just being good buddies. We were pals.
Just hugging it.
Yeah, we were just hanging out. I saw my toilet more than I saw my wife for sure.
Outstanding. Yeah. So I actually built call centers for all these companies and all over the world. So like did stuff in India and the Philippines and Mexico and all across the US or whatnot. But then just kind of decided that I'd had enough of the corporate world. And so had the opportunity to kind of make a transition, figure out what I wanted to do for the rest of my career. And so landed.
How long ago was this transition?
We're going into the second year now of that transition. So
was COVID a trigger at all? Like just the frustrations of going through COVID and amidst all the nonsense, or what? It was just kind of the candle burned out.
Yeah, it's just 25 years of kind of being in a kind of a specific niche and, enjoyed it for a while or for a good long time, but then just decided like, hey, it's, we have the flexibility to do it. So let's figure out what Evolution 2.0 is going to look like. And so I transitioned out of that. We've now moved to Puerto Rico, and now we're building an insurance company with both in the health space and the life insurance space. So kind of got both of those working in parallel. But the healthcare side of this equation is exciting for me because it's pretty impactful, and it's cool to see how we can benefit folks. But as cheesy as it may sound.
Why Puerto Rico? How'd you end up in Puerto Rico? Did you have a business venture down there in the corporate world and you're just like, oh man, if we ever get a chance, we're coming back here? Or did you just get like marooned there and you're like, I guess we'll just stay?
So we came down like a year ago for a mastermind event. And so spent like a week down there. At that point, just thought, we enjoyed it. Beautiful weather, great people. We've made some investments, and so there are absolutely some tax advantages to the system in Puerto Rico. So, kind of in making sure that we are positioned well for how these investments are going. We've made the move and are enjoying the island life now.
Is ROC technically headquartered in Puerto Rico? Is that like a good, if you're running a small business, should I just set up my bookkeeping? What I'm trying to say is, should my bookkeeping business be headquartered in Puerto Rico? I'm coming down tomorrow.
Only if you want to live in Puerto Rico for 183 days a year. But as long as you want to do that, then yes, it could be very tax advantageous for you.
That sounds pretty interesting. The hunting's probably not great, but I bet the fishing is phenomenal. So I think I could figure it out. I'd probably be getting into a lot of spear fishing is what I'm thinking.
Yeah, exactly. I was going to say, there's a lot of folks doing spear fishing. We're a lot of lobstering. So that's pretty cool. Yeah. People coming out with lobsters, just like huge ones in their hands.
The lobsters on the Gulf side, are they the ones with the snappers or the ones without snappers?
Yeah, they got the snappers.
Got claws. Okay. Yeah. I was in Costa Rica. No, where was I? Costa Rica? Mazatlan? Pretty sure. No, I was in Costa Rica. I was in Costa Rica one time on the Pacific side, and we were out spear fishing, and the first mate dove down. And this, like, I don't have this skill set. I don't know if I could groom this skill set or not, but this dude, like, free dove 40 feet down. He was down there for minutes, like, not just like a minute. He was down there for minutes, and he came back up. Like, he came back up with a lobster in his hand and a fish. I was just like, I just can't. My brain can't compute. Like, you're supposed to be dead, and yet you came up and you had. But the lobsters down there on the Pacific side don't have pinchers, and I was just like, you forgot two parts of it. And he's like, no, this is just how we do them here. And I was like, I don't know. That's not a lobster. That's something else.
What part of Costa Rica were you in?
Should have anticipated you asking me that. It was on the Pacific coast. That's all I know. Like if you said the name of the city, I'd be like, yeah, that's the one. This was a plot epiphany, which was a new segment I started on my radio show that I do on Wednesdays earlier in the day. I had the plot epiphany of there's certain things where I could describe the thing to a T, right? But coming up with the word is just like my brain is just not. It's not even in there. It's gone.
Yeah. I hear you. We actually lived there for a year, and but I can't remember where we lived. But my wife just told me Uvita is the name of the town where we lived.
There you go.
So
somebody knew it.
Yeah.
But if she would have said, "Hey, what was the name or this name of this town? Where was this?" You'd be like, "That was where we lived in Costa Rica, and I can tell you all about it."
Right.
And that, like, if you said the name of the city, I could tell you like the fucking way we got there from the airport. Like all the other stuff I could tell you, but the name of the town escapes me. It came up. I was trying to describe how hard it is to teach business owners, or for a business owner to teach other people in their business how to grow the business. It's like, we know how to do it. We have all these different mechanisms to do it. Yet I routinely see small business owners top out where they get to the point that they need to start teaching their team members how to grow their business, and they get stuck there. And in the home service space, it happens a lot right around $1 million. Like, everybody wants to be $1 million business, and they get there and they're just like, oh shit, this sucks. Cause it's like, yeah, the skill set of like teaching other people to be leaders and how to grow a business is a totally different skill set than how you pressure wash this or HVAC that or plumb this. And so everybody just gets like hung up there until you can figure out how to teach other people to grow your business. And it's the same as like, somewhere in there's a correlation between the skill set to remember the word of the thing. It came up on the radio show, and I was like, this example was perfect because of course I couldn't think of the damn word that it is. I was like, there's this invasive vine down south, and I know exactly what it looks like. And if you said the word, I could describe it in detail to you, but it like blankets the entire woods. And I've seen it, and it's beautiful and crazy and intimidating. And somebody was like, kudzu. And now I remember it because it just happened last week, but I'll forget it, by next week. And I was like, that's it. But if you would have said like, hey, what's kudzu? I'd have been like, let me tell you all about it. I can describe it in vivid detail.
Right.
Well, anyway, I digress. We got more people piling in here, folks. As you guys are checking in, Josh is the resident health insurance expert here. I just want you guys to drop a comment of right now, how do you have your health insurance, listeners? Are you privately insured like through your business, insured through your spouse? Give us a quick note about how you're insured. Josh doesn't really care. I don't think Josh cares. I think I just really care. I'm super curious how everybody's getting their health insurance today. I just had to switch. Josh, we were in that in my old business. Sorry, I'm like the worst host ever. I talk forever, and then I'll ask you a question in a little bit. I just had my previous business. We were over that 50 employee threshold.
Okay.
And so we kind of had to play the game where we had to offer insurance. It was the worst damn insurance on the planet. It was like the worst Blue Cross Blue Shield could ever offer anybody was what we had to offer. And so as the leader of that company, I kind of felt compelled to like take our crappy insurance that we had to offer everybody else.
Right.
And so I did. And plus my wife works at 3M, and so many big companies now have massive penalties for if you get health insurance through your company, you have to pay huge penalties to jump on their health insurance. Even like if theirs is a little bit better than the one you have to pay a $175 a month additional premium to jump on theirs type of thing. It's a super steep penalty. And so because my company offered health insurance, I couldn't jump on my wife's. Now that I took a restart with Best Damn Bookkeeping, now I got to jump on my wife's corporate health insurance policy.
Thanks.
We got somebody checking in, says they're on the private. Anybody else drop your note in here. What are you doing for insurance? How you getting or are you not getting health insurance? Are you just like, screw it, I'm healthy, I don't need it? Super curious. So sorry, Josh, you got into the ROC game a couple of years ago out of Puerto Rico. Sorry, I cut you off. Carry on.
No, you're good. And I was going to say, kind of in the no healthcare space, I saw someone posted on Facebook the other day that the question in terms of like, what's keeping you from being able to go full time into your entrepreneurial business, into your side hustle or whatnot. And there were ton of comments on there that said, I have to keep working my 9 to 5 because I need the healthcare. I have to stay with corporate because I need the healthcare. But, so healthcare, I think, is something that keeps people from being able to pursue what they really want to do, because it's like that anchor that holds them, one of the anchors that holds them where they're at. So,
yeah.
But yeah, so a couple of years ago we made the transition. So now again, we've been in the space of building a healthcare company and a life insurance company. And so I think one of the things maybe to call out right here at the beginning is we're not in the health insurance space. So what we do is called health sharing.
Gotcha.
And the kind of the differentiation, there is that, one, you can't call it insurance legally. But the advantage of what we are bringing to the market is the fact that, while it may not have the name, it looks and smells like insurance and tastes like insurance. But the label on it is health sharing. But I
appreciate you. I especially appreciate you calling that out, because I'm so damn naive. I wouldn't have even known that there was a distinction. Even if you had said, Dan, we do health sharing, I'd have been like, yo, what's up, listeners? We got Josh and he does health insurance. Like, I just wouldn't even know. I would have just been like, oh, it's just the thing that Josh calls it. But no, I appreciate the distinction.
Yeah, no, for sure. So, yeah, we're the company that we represent it's called Impact Health Sharing. And like I said, I'll give you an example maybe in terms of one of the big differentiators that what we find with folks is just cost differentiation. And so when I was in my corporate job working for Ferguson, normally big companies like that, they'll pay a portion of your medical and then you're responsible for picking up a portion of it. So my portion for a family of 3 was a little over, I think, $1,200 a month for our family. And I think we had a $7,500 deductible. And so, that doesn't work when you necessarily transition out of your normal W-2 job. You're, looking for.
You're like, how the hell are we going to pay this? This is quite the grocery bill here.
Right.
This is quite the grocery bill for something we don't get.
So we're able to transition from that into Impact for, I think it's $600 that we pay for a family of 3 on a $2,500, essentially deductible. So, it's the ability to keep a bunch of your money back in your pocket or whatnot. It's a pretty big deal.
Most people like having money back in their pocket is what I've come to understand. But I want to get more into the specifics of the health sharing space. I want you to define health sharing and give us a better grasp on that. I want to kick a bunch of things around. Listeners, you guys drop in the comments here how you guys are getting your health insurance today. Super curious about that. Also drop in questions you have for Josh, for sure. If you're like debating between a couple different options, if you're thinking about stuff for your business, which we're going to get into, if you're thinking about stuff for you personally or your family or whatever the case is, drop your notes in here while we got Josh on the ready to give us some thoughts and some answers. Josh, do you so at ROC, you guys said you do the life and the health. Is that the entirety of the vision for the business? Are there other avenues that you expect to grow into over time, or things that you've dabbled with here?
Yeah, we've probably dabbled with a couple of things in the past, but we've kind of evolved into this space. And for this at this point, this is kind of where I see us in terms of when I say life insurance, that's probably a pretty vanilla explanation for what we do. And, the bigger explanation is, we show folks how to leverage life insurance so that they can, keep as much money as they want off the radar of the IRS, using life insurance as a tool, and then show them how to collateralize policies, use it to grow their businesses, use it to make investments, but ultimately use it for retirement income to where you don't have to file a tax return in retirement. So, that may be something for you. I don't know, maybe you got to plug your ears on some of that stuff, but it's a pretty powerful tool. But so we're in that space. And then of course the healthcare space, just because, it's something that's needed in our country, the
big time. Big time.
Yeah, one of the top reasons or top concerns that you see when you look at surveys, people talk about the healthcare expense is a major financial concern for them. So if we've got an opportunity to help folks in that space, then that's what we want to do.
The super interesting thing to me, and just in all of the insurance spaces, but health especially, is just like over the last decade, the inflation in the cost of health feels like 10x the speed of inflation in anything else. It's just like, can it possibly get more expensive? And then the next year it gets so much more expensive. You're just like, no effing way. Like, this is consuming so much of my income. What is there? Do you have a beat on like what's driving that? Is it doctors? Is it hospitals? Is it the system? Is it the government? What's going on here?
I think the answer to that is yes, but maybe starting on, I think it starts on the government side. What's the quote? Always be afraid whenever the government says, I'm here to help. And so, when you look at what they did in the Affordable Care Act, part of that, sounded great. They're like, hey, we're going to limit insurance companies to where their profit can't be any greater than 20% of the premiums that they take in a given year. Well, if you're an insurance company, then how do you continue to make more money year over year? How do you create shareholder value? Well, if your only mechanism is to take in more premium, that means our premiums continually have to go up for them to be able to increase their margins. So then incentivizes doctors, hospitals to continue to increase their billing, because the premiums are out there, so they might as well go ahead and submit it and get.
There's no ceiling on the dollars. It's just a ceiling on the percentage. So as long as we make the dollars of cost bigger, then the percentage in turn can stay at 20, but the dollars keep going up.
Exactly. Yep.
Interesting.
So
I never thought of it that way.
And that's also, when you mentioned earlier about the difference between health insurance and health sharing, one is that the vast majority, if not all, of our large insurance carriers are for-profit businesses, right? So, they're out there, they've got heavy executive salaries, they've got expectations that they're going to be returning profits to shareholders, paying dividends, doing all the things that corporations need to do. On the flip side of that, the health sharing world traditionally operates as a nonprofit, so they're operating as 503Cs. And so they're in a position to where their main focus or their primary focus is just about paying bills. There are no shareholders, there are no, profit motives other than, of course, yes, they do have an executive team. They have to pay some salaries and whatnot. But at the end of the day, they take care of that. And then everything else underneath that is their only objective is to make sure people's bills are paid. So, we don't see the same bloat in the health sharing world that we do in the insurance space.
What is there like a relative percentage of like how much of the space is made up of sharing companies versus insurance companies? Is that even a fair way to put it?
Yeah, I mean, I think I get where you're going. They are much smaller. Like the largest health sharing organization out there is actually one that you probably heard of called MediShare, and they're you hear them on the radio, and a lot of times doing different advertisements and whatnot. They've got, I think, right around 500,000 members, but comparatively to the insurance industry at large, it's still relative.
It's peanuts.
They're small. So
my guy Doug Brown's checking in. Doug, I'm curious, how are you insured? Doug, where are you getting your insurance from these days? Your health insurance? You getting it through your wife's company while she's crashing your Jeep Cherokees, or how are you guys doing it? Everybody else listening, chime in. How you guys? Let me know how you're getting your insurance and what questions you got for Josh here as we get going. Because I'd like to get into some specific cases. Would be super interesting. Josh, give us whatever detail you see fit as to what are the differences between a health sharing company and a health insurance company. Can you chalk those fields for us? Like what distinguishes them?
Yeah, well, I mean, there are probably several, right? But I think a lot of the ones that we call out in terms of a lot of times when you have traditional insurance, right, you've got a network of providers, so they're going to provide you that PPO network, or these are the doctors that we've contracted with. So here's the doctor you can go to, the specialist. You can go to these 2 hospitals in your town, and on, especially with Impact. And this is not true of all health sharing, but it's true of Impact specifically. We don't have a network. So it's go to any doctor, go to any specialist, go to any hospital, go to wherever's going to provide you with the best care. And then Impact works it out on the back end in terms of billing and doing all of that stuff or whatnot. So, that's a pretty significant deal from my perspective, because at the end of the day, if I, God forbid, I or someone in my family gets cancer, like I want to be able to go up to John Hopkins with no questions asked, or I want to go, so I want to be able to access the very best. And so I want that flexibility. And, that's one of the big differences from my perspective.
So why the restrictions for insurance companies? Is it that they're trying to bargain better rates or something like that, or create some exclusivity or something along those lines?
Yeah, I think some of it has to do with some pricing components. And, there are some doctors who, I think that because some of it is doctors will go through a process to align themselves with different insurance carriers. And some of that has to do with, hey, I don't want to go with this particular carrier because, one, maybe they're going to be more engaged in dictating the quality of care that I can provide to my patients. So I don't want that relationship. Or I do want this because I know that they pay more quickly maybe than some of the other carriers. So I think a lot of it is doctor discretion, but then there's definitely some pricing components in there too.
Okay. And why wouldn't they include everybody? Like in a sharing company, the door is wide open. Is it for, I guess, on the provider side of it? Do they have a preference? Would they rather have you have an insurance company versus a sharing company?
I can speak to what we hear from our doctors, and our doctors definitely prefer, the doctors we're engaging with definitely prefer working with us. And a big part of that is because right now our days to payment for them is 18 days. So from the time they submit a bill to the time
that's crazy.
They're 18 days. Whereas with a lot of the larger carriers, they could be 30, 45, 60, 90 days.
I was going to say months. That is not measured in days. It's measured in months.
Yep. So, and that's, that 18 days or those kind of stats that, again, I'm obviously I'm biased because of this is who we've aligned with, but the transparency that Impact provides, like you can literally for our members, they can log into the back office portal or whatnot, and they can see those stats. They can see how the funds are being allocated both at a company level as well as individually for what's going on in their account. They see where every dollar is going. So, Impact is very big on transparency and, wanting to show folks like this is how we're spending your money. Like, feel free to dig in.
Awesome. Doug's got a question for us here. He says, any thoughts on U.S. Health Advisors? That's who we use from the private side. Have you heard of that one? Any experiences with them, Josh?
Unfortunately, no. I don't have experience in terms of like being able to provide context on. Yeah,
they suck, Doug. They suck. That's all you need to know. Josh, never heard of them.
I'm just trying to be nice, but I appreciate you.
No, I like Doug. I like messing with Doug. Josh, is there so on the sharing side, is it considered sharing just because like the users are pooled in there to some extent, or how does is that the mechanism of spreading the risk out, I assume?
Yeah, and so like if you go back to the very beginning of health sharing, like it really started in kind of the church environment, and so they would literally like kind of pass a hat kind of deal and say like, hey, the Joneses have a financial need for a doctor's visit, and so like everybody would pitch in a few bucks and help take care of their financial need. And over the decades, because health sharing is about 40, give or take 30, 40 years old, it's evolved into something that's much more technologically based, other than passing the plate, but fundamentally there is still a component of, hey, we're all kind of pitching in. And in Impact, yes, we have our own individual accounts and we can see what's going on in our account. But if somebody has a need that surpasses the funds that are available in their sharing account, then the system will go out and it'll say like, hey, we can grab a couple bucks from here and we can grab a couple of bucks from there, and then make sure that everybody's needs are taken care of. Because, really at the end of the day, like with health sharing and with Impact specifically, they are focused on identifying like, hey, we kind of target folks who are of a better, like relatively healthy, to bring them into the plan. And so, in that space, like there's the ability to take excess and move it around. And, on average, they're usually sitting at, $6, $8, $10 million that's sitting in the pool waiting to take care of folks' health needs. And that just continues to grow as the member base continues to get larger and larger.
Are the member bases segmented at all by age or by pre-existing conditions or by health or by occupation or by geography or anything like that? Or is it just like everybody together?
But everybody's together from a sharing perspective. But when you look at it from a pricing perspective, we look at two things, I guess. So it's the date of birth of the oldest person in the family, and then how many people are being covered. So is it one person, two people, or three or more? And so there's no differentiation once you get to three or greater.
Somebody's always going to be in the shop, so we're just going to price you accordingly. Maintenance budget.
So was listening to some folks the other day that they have 6 kids, so a total of eight folks that moved over onto the plan. They, when they were in the traditional health insurance world, I think they were paying close to $2,000 a month. Now that family of 8 moved over into the health sharing world, and it's right around $500 a month that they're paying. So that's $18,000 back in their pocket. Like that's real money. That's some real dough. At least 2 trips to Disneyland.
No kidding. I don't even know if it is anymore. After I was just there, I was just like, everything is just outrageous. I mean, maybe if you're only doing the Genie Plus lighting lanes, but maybe not the additional ride specific lighting lanes. In the sharing model, is it built for private individuals, or does it work with businesses in terms of like a thing that they can offer to their employees sort of situation?
Yeah, absolutely. It's definitely built for both. It's really, the way we focus it is right now it's targeted to companies that haven't hit that 50-person threshold where they have to offer a true group insurance plan. So, so we would target 49 employees and below is kind of the sweet spot for Impact. Individuals, families, and then businesses that are 49 employees or below, we offer the ability to do kind of like group plans, to where there's one portal for the business so they can see all of their employees in one spot and take care of all the billing and all of that kind of stuff. So it's a pretty seamless transition.
Awesome. I would imagine, because you already pointed this out earlier, which is part of the reason a bunch of folks don't go into their own small businesses, because they're afraid of what they can do from a health insurance standpoint. They don't want to give up their benefits at their previous job, so they drag their feet. I would imagine a decent margin compared to just other, there's not small business owners falling out of the woodwork everywhere, but in the space you play in, I would imagine a great market for you is the small business owner who otherwise is just probably going to have a bitch of a time trying to get health insurance unless their spouse is working a full-time corporate gig and they get good insurance through them. Yeah,
no, absolutely true. We see a lot of folks talking about the fact that, small business owners who have employees and who haven't traditionally been able to afford to offer insurance, that this gives them the ability to provide that as a benefit to their folks. also, goes a long way onto the employee retention side of the equation as well. So we hear about that a bit. And then as well as just, there are quite a few companies that we work with to where they are providing insurance, or they're providing healthcare, but traditionally insurance. And then we come in on the health sharing side and we're able to save them 10, 20, 30, $40,000 a month in their expenses. And so, business saves $30,000 a month. What could they do to grow their business with an extra 30K that flows down to the bottom line? So, the ability to generate some additional savings, maintain the benefits, and maintain the retention components, can be a kind of a trifecta of a win there.
Yeah. Retention, I think, is a super good point, because I have seen, especially over the last 3-4 years, when the labor market just kept getting drier and drier and drier. And then when you thought it could get worse, you're like, dude, there's just nobody that wants to work anymore. Right. There's people out there. They just probably already have a job somewhere already, right? And if you're going to attract them to your company, you've got to have something that other people don't. And benefits, especially in the small business space, benefits are a massive way you can set yourself apart, because a lot of small businesses can't afford to offer them. Did you see a wave of that over the last few years, of just more small companies taking that leap and offering those benefits to try to fight against this labor shortage we've had?
Yeah, absolutely. Have seen an increase there. And, I would say it's fairly balanced in terms of folks that are looking to add a benefit, as well as folks who are looking to say, like, hey, traditional insurance is killing me.
Costs suck.
It's fine. So what, if you can offer me something that at the end of the day is equal or better, and I can get it at a price point that's going to, throw additional dollars to the bottom line, then that's a win for me.
Cool. How does the pricing structure work through a sharing? Is it you pay a premium and then you have a deductible and a limit, and you have some co-pays, and are there different levels and whatever? Give us like a little rundown of how the pricing works. And I just said a bunch of words that I kind of understand, but not really. So help everybody else understand it from me just saying words that are words.
Perfect. So, I think you touched on a bunch of the key words when you think about traditional insurance, right? Which is, you've got your monthly premium, then you've got your deductible, you've got co-pays, you've got kind of what is that co-share amount going to be in terms of like, hey, is it an 80-20 split once the insurance starts kicking in? So we just, all the same concepts in the health sharing space. We just use different words. So in the health sharing space, you still have your premium that your member amounts, right, that you're paying in. We, instead of deductible, we say primary responsibility amount. So we just add some words to it. But at the end of the day, we offer a $2,500, a $5,000, a $7,500, and a $10,000 primary responsibility amount or deductible. And so the lower the deductible, the higher the premium. Higher the deductible, the lower the premium. But that's really kind of all of the nuances in terms of what it looks like. Hey, there we go.
He's not covered in spaghetti anymore. I got him cleaned up. He's all clean, ready to go to bed. He just had to come down and see the fish, and then there's a bear on the wall over there, and he likes to roar at it. So I had to get his roar in for the night. You going to bed, bud? No, because he's not going to bed.
We haven't had the roar yet. We can't go to bed yet.
Is that funny? All right, you say good night. Oh, you're just pointing at Josh. Now you're waving at him. That's cool. All right, go see your mom. See you, dude. Well, that's sad. Oh, he's still he's got it. There you
go. Man.
Good night, bud. Okay, go roar at the bear again. Every time we put Crosby to bed, he's got to make his rounds around the house. And if you try to put him to bed before he gets to say goodnight to everybody, probably twice, he's not having it. He's just like, no, I need to say goodbye, and then I need to say goodnight, and then I need to give him a hug, and then a high five and a fist bump. Everybody knows that. Here's an interesting question for you. why can't you call it insurance? Because it like functions the same way. Is there like a weird they're trying to be the cool kids club, or like what's the legality thing that it's not, considered insurance?
Yeah, so from a government perspective, they have a true like set of rules or a carve out specifically for health sharing. And so I think a lot of it ties back to even to the having to provide a group health insurance plan once you hit 50. Like the health sharing plan doesn't meet that qualification. So even though you could allow it to ride side saddle, so like you could still offer your group plan and you could still offer a health sharing option, but you still have to provide access to a group health plan or whatnot. So,
really? Okay, that's weird.
Insurance. So,
hence why you guys focus on 49 or under, because the 50s or over have to go get a crappy insurance plan like I used to have to do.
Yep.
It's a bummer for them. Do you find, I'm just thinking about this from a business owner perspective, this makes a shitload of sense to me for the business owner themselves. One thing we used to run into, Josh, is we were over 50. We had to offer this insurance plan, and out of like 70 to 80 employees, 3 took it.
Right.
I mean, it's just like, it's unaffordable. It doesn't make any sense. Is that common? Is that common that employers try to offer health insurance and everybody's just like, I want benefits. Oh, well, I don't, if I have to pay, and like we pay half, right? And it was this weird incentive, because I was like glad when they didn't take it, because I was like, well, I guess it saves us 50%. It felt so stupid.
Right.
Like we had no business offering it, but we should have been working with somebody like you to let people opt into something that makes a lot more sense for them. Is that common? Were we just weirdos? Or do you run into a lot of that where like only a handful of people in the company actually want it? I feel like it's like buying cage-free eggs. Everybody says they want cage-free eggs, and when they go to the store and they're $7 a dozen, they're like, "Oh, just kidding. I just want everybody else to have to pay for cage-free eggs."
No, I think that's super common, and especially at that on the kind of the lower end of the threshold in terms of the number of full-time employees that companies have. Like, way different game when you're talking about a company who's got 5, 10, 20,000 employees, like, and they're doing self-insurance and just using plan administrators and all of this stuff. But when folks are, just hitting that threshold for being required to provide group insurance, and then, the plans are crazy expensive, they're not providing a ton of awesome coverage. Like, I've heard statistics that, anywhere from, single digit people, but a lot of times I hear like 20% of the folks may take advantage of it. And a lot of that is because their spouses may work for a larger corporation who has the ability to provide a little bit more robust plan. But we definitely see when we're able to come in and help folks with the health sharing and the cost, it's no longer, at least it's not as cost prohibitive. It's still got a cost, but we find, especially with businesses, that we're able to save 30 to 70% on their healthcare expenses. So it definitely throws a bunch of money back in folks' pocket.
What's the most outrageous thing you've seen from the insurance side of things? Like when somebody's come to you and been like, "Hey, here's what I got right now," and you like looked at it. I gotta ask this because I see some of the most hilarious stuff on the bookkeeping end of things when they're like, "Here's what I got," and it like knocks me out of my chair. Have you seen anything where you're just like, what the hell was going on here?
Yeah, there's a lot of stuff in terms of like when folks go to the hospital for whatever, maybe they broke a foot and the hospital sends a bill for like 12 grand or $15,000. And a lot of folks, without knowing, or if they didn't have insurance, they just like, I guess that's what I have to pay if they don't know any better. But then, our folks, then they negotiate that bill. And on average, they're able to reduce the bill by 80 to 90% in terms of what the going rate really should be for that service. And so we knock those bills down drastically. And
is it just that the hospital has a high price and is like, well, we're just going to price this outrageous thing, and we know we're going to knock the hell down on it if they're going to fight it. But unless they fight it, we're just going to charge a super outrageous price and hope they take it.
That's you look at the line item and they charge you $120 for a Tylenol kind of deal. And
yeah, I've had 3 kids. I've seen that line item on the bill. It's just like, I'll just bring my own, man. I'll smuggle my own in.
But so you see that stuff. You see, like on the medication side, that if you were just going in and just paying full book value on some of the prescriptions, someone may come in and pay, or it may be an initial bill of $300 or $400 for a particular medication, and then using our wholesale program, it'll go from that down to like $12 for the same set of pills or whatnot. And so it's just, it's having someone in your corner that can negotiate and make sure that you get the best price for the service that you are receiving.
Here's a goofy one. I just thought of this as you started talking. Our first kiddo, we had our hospital that was in network and blah blah blah. I forget. I feel like this. My wife was in grad school, so it would have been on my insurance when I think it was Blue Cross at the time. So we went to this hospital that had a really good mom baby center thing. That was where we went, and it was great. And it was like a brand new area, and especially for like a first kid where you're just everything is new and scary and uncertain. And we got there way too early, and my wife was having contractions for, I don't know, felt like 7 days. It was like a day, but like she wasn't dilated enough for us to like get a room in the hospital. So we were like walking around the hallway. I'm like rubbing her back and pushing on her back as she's having contractions and just yelling in the hallway. I'm just like, don't mind us. We're just doing our thing here. Like, we ain't trying to bother nobody. And we finally got in, and she, it's kind of one of those things where it's like you kind of have a plan and then you get punched in the face and then you're like, give me the fucking drugs. That's kind of what it turned into. It's like, yeah, we'll try to do a natural birth, and my wife's just like, give me the epidural. It reminded me of Chris Farley. Like, just give me the damn French fries. So we got the epidural, and when we got the bill, it was $18,000, and like the epidural itself, like, hey, here's a needle with some drugs in it. I don't remember what the itemization on it was, but it was like $10,000 because the nurse anesthetist was out of network. And it's like, wait, we're in a network hospital. That dude coming with the epidural why would it was in this hospital where we're having our baby, and you're telling me that person is like, that was the most expensive thing. If I'd have known that would have been out of network, I'd went to the hospital where that dude was in network and the hospital was out of network. Like, right. How could that person not be in network when we're at this in-network hospital? And I think we tried to fight it, and I think we just ended up paying it. I don't remember what happened. I think I blacked it out, or probably just drank myself stupid with too many beers to forget about it. But I just remember seeing that, and I'd be like, what a corrupt thing. Like, how sideways was that? But then it was also like, well, I mean, it worked, and we had the baby, and so we're thankful, and so it's just like, just pay the damn bill.
Everybody's healthy, and that's ultimately what matters, right? But yeah.
But at the same time, you're just like, we were naive as to like what the cost of a baby was. So we're like, yeah, people have said this is expensive. This is expensive. Our next 2 kids were like $2,000 or $3,000, and it's like, oh shit, we got like taken. We got hosed. Like, we got taken 3, 4, 5 times more than it should have been.
You should have wore the first-time parents shirt. I mean, you should have left that off.
Dude, they had us pegged. They had us. We were the tourists or something. Man, they saw us walking in. Like, we can gouge the hell out of these dummies. They're just happy to be here. They're just happy to be here. And we were kind of, or maybe we weren't. I don't know. It was now I'm having like flashbacks. Walking through the hallway with a yelling at me wife who I'm trying to like rub her back while she's standing up is very, very interesting. But like, is that a thing? Is that possible to have the nurse anesthetist not belong to the hospital, and then you don't have a choice because it's not, you can't be like, Oh no, send him back. We want the other dude.
People think to say like to ask that question before they put the needle in, right? Like
why would that be a thing you'd even have to think about?
Yeah, but yes, it is like that is absolutely not the first time that I've heard that story, and yeah, it's just an unfortunate part of the game that's out there.
It's so weird. I don't understand. It would be like pulling up to a fast food restaurant and being like, I want one of these, one of these, one of these. And then instead of giving you your price, they're like, cool, good luck. Like that's kind of what it feels like. Like you don't know how much it's going to cost. They're just like, yeah, we'll give it to you at some point here, and you're just going to have to wait for a while, and we'll tell you how much it costs after you're 10 miles down the road. Like we'll
sounds like maybe
later.
Wendy's new surge pricing, right?
So, yeah. I mean, like that's a brilliant fast food model. Like we'll bill you tomorrow after you've already eaten it all, and we'll just decide later what it's going to cost you, and you can decide if you feel like spending your time to fight it. I think I'm gonna do that with bookkeeping. I'm gonna change my bookkeeping business model. What's it gonna cost? I'm kind of going with the medical model. I'll just tell you later.
We'll have to decide later if you're in my network or not. So
yeah. I think that's going to be just a new comedy skit. Like everything's going to turn to like medical terminology if you're in network. But if I understand health sharing right, there is no network. It's just open. It's just open. I love that.
Again, maybe just clarify that is not true of all health sharing.
That's a good distinction. Good distinction.
So that is true of Impact, but there are other, Clearwater or I think MediShare both to an extent have a preferred network or whatnot that they work within. Impact has just taken the stance that they want folks to be able to determine who's going to provide the best care, and they'll work it out from that point forward.
Cool. What are some, besides nurse anesthetists that are in a network of the hospital that you're having a baby at, what are some other things just as future patients that we should all be thinking about or watching out for or not being wildly oblivious to, so that we can kind of protect ourselves from paying out the wazoo?
Yeah, I think part of it is just like, so for folks that are using the more traditional insurance and, or maybe that don't have insurance, would be twofold. One, like you have a right to see the itemized bill, right? So, which gives you better conversation power to say like, hey, we're not paying $100 for a Tylenol. So like, we're going to need to chat about that. But the other piece I would say is recognizing that there is the ability to ask for, the cash price. And so, the cash price is going to be drastically different from what gets billed to insurance companies. It may not be.
When you say cash price, that's like show up with a few grand ready to go, just, in case you need to. And is there like, do they have a documented formal cash price, or do they just make one up on the fly?
That I'm not sure exactly what that process looks like, but I know that
maybe it's at least a negotiating tool. Like you guys said, the cash price was this, and now you charge me 5x that. Like that doesn't compute.
I was talking to a guy the other day, and they were going in for a childbirth, and so that hospital was wanting to charge something like $30 some thousand for the delivery, and no. And so that individual ended up asking, okay, well, what would it be if we just paid cash for the delivery? And it went from like 32 or 33 down to, I think it was like 6,500 when they asked what the cash price would be. So, it's just understanding that
their merchant processing fees at that hospital are terrible.
Yeah. And can you help them with that too? Do you have someone in the network that can help them?
Probably. That's crazy.
Yeah, but
I would think they'd charge you more. I would think they'd charge you more to pay cash, because they'd have to like keep track of that shit. Like cash is a bitch to keep track of in a big company. You'd think they want it to be digital, so it's easier for their record keeping purposes. takes more people to keep track of a bag of money than it does a digital transaction these days.
Yeah, well,
maybe that's just the bookkeeper in me.
But the other things, I think with looking at different, if you're comparing different companies, or whether insurance and health sharing, or is also understanding like what are the types of treatments and providers that are important to you. So like for myself, like I'm a huge advocate of chiropractic care. Like I love my weekly adjustments kind of deal. And there are plenty of insurance companies and even health share companies that don't cover chiropractic, or they're only going to cover it if you have a specific spinal condition that needs to be corrected, et cetera. Like they don't cover just kind of day-to-day maintenance. So again, understanding what kind of treatment or what kind of care is important to you, and then making sure that when you're looking for plans, that you understand what kind of coverage is going to be provided, if any. And again, for us, that, and shameless plug, right, I guess, but that was one of the advantages for us with Impact, because they cover 50 visits per person in the family per year. So every single week, about our family goes in and gets their adjustment, and it's part of the plan that we're on.
Yeah, heck yeah, yeah. I've had like good and bad chiropractic experiences, but I never am at a time period where I'm like, my back feels great. Like it's always a work in process. Is there a point where, and I don't know if it would be age or health or anything along those lines, where it makes sense to like roll the dice and not have any insurance or sharing, or really like limit it? Like, cause I said, I'm pretty damn healthy. I exercise quite a bit. I don't go in I take that back. If I sniff poison ivy, holy shit, Josh, I got to go. The only saving grace is that my brother's doctor. And so every once in a while, I'm like, Chris, I need all the stuff. I need the thing and the this and the pills for that and the steroids for this. Like if I sniff poison ivy, I might as well have rolled in it. But is there ever a period of time where like you're just like, yeah, I get it, or you're like, no, you're a dumbass, get some sort of coverage, because you never know?
Yeah, so especially I would say in the health sharing space, which again it is the most economical way to go. I would liken it to life insurance as well. So yeah, you can roll the dice, but if something happens, you may not be then able to get the coverage. So, if hey, I'll get life insurance next year, but you had a heart attack this year, well, you're not getting life insurance next year, because now you're likely not going to be underwritten. Same thing.
Kind of locking yourself in a way.
It's all well and good until you find out that, whatever lump or whatever else is going on, like, and then does that impact your ability to get the coverage that you wanted? And yeah, you could, because coverage is guaranteed in the insurance world. So yeah, you could go to, the marketplace or whatnot, and you could probably find something for, but at that point, are you paying $2,000, $2,500, $3,000 a month or whatnot, versus, hey, if you had done it when, you were healthy and you were feeling good or whatnot. And if you're a single individual in your 30s, a couple $100 a month, to a couple $100 a month, versus the risk of, not being able to get the coverage when you need it.
Yeah. Josh, I got a handful of questions left for you, but let's do this real quick. How the heck can somebody find you if they need help figuring out their health coverage?
Yeah. So rockhealthsharing.com. So phone numbers are on there. There's a form, contact us kind of form kind of deal.
When you say ROC, you're saying ROC, ROC, no K, right?
Thank you. ROC healthsharing.com.
For all the future podcast listeners out there.
Outstanding.
That's me. See, I'm just recovering from when I was being a terrible host earlier. That's me being a little bit better host now. So just trying to like get
appreciate you.
Yeah. I threw it out on the YouTube chat right now. I'll drop it on the Facebook chat here too for everybody so you guys can see it.
Folks are also welcome. I mean, if they want to give me a call, it's 804-774-7677. That's my cell phone. If anybody just has a question or wants any feedback, like, happy to chat.
Awesome, man. I appreciate it. I want to talk the life insurance side, because that always feels like a little bit of a black box. You got your like term, you got your whole, you got the universally stuff. And term makes a lot of sense. Term's just like basic risk reward, right? It's like I have, I don't know, $1 million or $2 million worth of term right now, and then at some point, like, my kids are old enough, like, go get a job, cancel the term. But then we've got some whole life insurance too, and you were kind of alluding to this earlier. And my understanding is the value of doing that. Now, I'm going to say these two things, and then you're going to be like, no, Dan, you're an idiot. But I'm going to say them first before you tell me that. My understanding with the whole is very much that, yeah, like if I wanted to do term and then do an investment thing, I could probably go get better returns on that other investment thing than whole, which it has a term and an investment component and a cash value thing. But the tax impacts of having that cash value building up and the death benefit of that, whatever else too, that is a different, my financial advisor always explains it as like, you have your 401k money, that's tax advantage this way. You have your Roth IRA money, that's tax advantage this way. And then you have your whole life insurance money, and F the government, because they can't touch any of it once you get through it. And so, like, make sure you have some of that too, because there's going to be years where you have a really high tax bracket for other reasons, and you're going to want to like pull any residual funds from that bucket. So he always explains it in these buckets, like you just pull money out whichever tax functionality you're in at that time. A, how did I do? B, correct me where I screwed up there, and lay out those different life insurance buckets for us as I did terribly.
No, I think you did not do terribly. We have some pretty specific strategies that we use that are, maybe less common, or ways we talk about things that are less common. So maybe starting on the term side of the equation. So you've got traditional term. Yes, it can be. It's absolutely better than having nothing at all. If you look at the stats on the term policy, it's something like 98 or 98.5% of term policies never pay out.
I would hope not. You sure hope they don't. It's a bad day when that pays out.
Yes. Although, and that's where, you got the Dave Ramsey school, right? Like, get term and invest the rest kind of deal. But if I was going to be in the term space, which I do have a term policy as well, I'd be looking to make sure I had a convertible term policy, which basically means that I can convert that into a whole life policy, and I haven't thrown away all of the money should I choose to make that next step into moving into a whole life cash value.
It's kind of like renting a house, and then at some point you want to own it, but is your rent all for naught?
Right. Yep.
It's like you're renting a casket, but then you want to buy it. It's pretty much the same thing. It's your perpetual home. I mean, it's just perpetual home. You're gonna be there forever after that.
Absolutely.
Like, you think this is your house, that's your home. You're gonna be there for a long time.
Get a fancy one.
Make sure you like it. There ain't no going back. Nobody's gonna listen to you after they got you in there.
I guess the other piece is, like, I'm not a big advocate of 401ks, and yes, I understand the advantages, of course, in terms of going against this year's income, and so being able to reduce your taxable income. There would obviously be an argument to say, like, hey, if your employer is matching your 401k, like, at least get the match dollars so that you're
get your free return.
But at the end of the day, you're building an account that no one knows what your tax liability will be in the future on that account, because no one is, even your I'm sure your financial advisor isn't going to tell you like what the tax rates are going to be 15 years from now. Cause
Yeah, I tried to pin him down on it one time and he was pretty squirmy about it. He wouldn't
right. So at the end of the day, we're building these massive accounts, and, the traditional wisdom or the traditional kind of commentary says like, oh, it'll be fine because you're going to retire in a lower tax bracket. Well, and in my opinion, what they're saying is it's fine because you're going to retire poorer than you are today.
Yeah, the government will make sure that you don't have as much money.
That's not my goal, is to live a lifestyle that's less than the one that I'm in today when I move into retirement. Yeah. So we show folks how they can leverage a whole life policy to be able to maintain a standard of living, the same standard of living that they have today moving into retirement. And so, that's the tool and the strategy that we use. And there's a lot more to it. But I think the other thing that you called out, which is absolutely correct, is like when you look at things from a rate of return perspective, like cash value life insurance, like the return sucks, right? Like you're going to be looking 5-6% maybe on a between the guarantees and the dividends that you may receive. But if you look at the spendability of a whole life policy in terms of the facts that they are tax exempt when I'm taking money out of theirs, like there is nothing that we have found that spends better than a whole life policy. So it'll spend better than your 401k. It'll spend better than your Roth. So when you compare, we do a whole like hour talk on this, but when you compare the spendability of a life insurance policy to anything else, like you'd have to, in your normal money market accounts and with your investors, et cetera, you'd have to earn like 27% year over year over year to be able to equate to the same spendability coming out of a policy. So,
yeah. I think I have this right, but I'm not going to say it like it's a fact. I'm going to say it like I heard from a guy that I heard from a guy that heard from a guy type of thing. But I believe there's something along the lines of, and I'm going to clarify a perspective of mine to follow this, but something along the lines of like from an estate planning perspective, you can basically pass along that entire amount tied to your whole life insurance kind of tax-free. That passes and it's purely insulated. Everything else is just basis, and then the beneficiary has to pay taxes on it. There's state by state income limits, blah, 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 blah. But I think that's another thing too, if you're interested in what your future generations are going to have to pay when you die on your stuff. I'm not concerned about it. I've made it really clear to my kids that I plan on leaving them nothing. They need to go earn everything.
Fair enough.
Like
you're gonna go buy your own bear if you want to keep roaring at him.
Yeah. Go get your own damn bear. Like, I mean, I haven't shot a bear yet. My dad shot this one. I'll go shoot my own bear. I need my own bear rug. But I love to play devil's advocate and be a total contrarian. But there's this freaking like trendy term going around of like generational wealth this, generational wealth that. And I'm just like, man, I don't know anybody that grew up with like super, super wealthy parents that didn't kind of turn into a piece of shit. Like they just, not all of them. Actually, I know one young guy right now that is great. And it's all because his parents didn't give him any of it. Like they didn't let him touch any of it. He had to work for everything he's gotten, but he learned his work ethic from watching them because they had to work for it all and they didn't give him any of it. And it's like, man, if you give somebody something, they don't honor it. They don't respect it. They just come to expect it, right? They don't respect it. They expect it. And in turn, they turn into kind of shitty, privileged people. Whereas if like they have to earn it, then there's pride. And nobody gets joy out of getting something. They get joy out of earning something. And so like, which I think is what fuels a lot of small business owners. It's like, yeah, like there's a money aspect to it too, that we like to earn the money, but it's actually just about the pride. We just like overcoming hard things and saying we did a thing. Like that's what fuels us. It's nice that there's some money at the end of it sometimes, but it's the pride thing. I'm like, I don't want to take the pride away from my kids and like have them get something. Like, how awful would that be? Then I took away all the joy and the fun. So in my will, for them to touch any money that ever gets left to them, there's a ridiculous list of things that they have to do that if they're a decent human, they won't have done half of them. Or it all goes to charity. So I was like, they got to earn that shit. No freeloading around here. No generational wealth around here. You got to go earn your own stripes, and you'll be better for it, and you'll be happier because of it. You don't want my money. Go make your own money. You'll have way more fun doing it yourself than getting my bullshit money.
No, I like the perspective. I think there's, realistically there's and this would be there's a whole nother conversation wrapped up in this somewhere. But again, what we try to show folks is really threefold. So it's how to use money today.
Hold on. This Charity Lane chimed in here. She said, "Thanks for that." Oh wait, a different Charity. She said I was giving it to her. Yeah, I didn't. Now that you mentioned it, Charity, I don't even know what it says in the will. It might just say to give it to charity, and so you might make a case, be like, he was talking about me. That was me. He was talking about. Who knows?
And I'm pretty sure she can cut up this little conversation right here and make it sound like you just gave it all to her.
The joke's on her. I just have a shitload of debt, and we're in the hole. So it's all yours, Charity.
Awesome.
Sorry, I cut you off. That was too funny.
No. So we focus on three things, right? Like how do you leverage it in collateralized policy to do what you need to do today? Then how do you leverage it for retirement so that you can, again, collateralized policy, use the cash value for your retirement income. So again, doesn't show up on any tax return because there's no 1099s or anything issued off of a policy. And then at the end of the day, if you choose to say like, hey, I want all the death benefit to go to charity, congratulations, charity, you got another one. Big winner. You can, there's nothing that says it has to go to family or kids or whatnot. Like it's a contract. So you dictate where you want that money to go, how you want it distributed. If you want, X percent to go over here. Like, so, when you transition into this environment, you're in control of how the funds ultimately get distributed.
Yeah, I like that. Well, shit, Josh, I feel like we covered a heck of a lot of ground. Is there anything that I didn't ask you that you're like, oh, you should have asked me this, you average show host?
No, nothing that comes to mind. I think you did an outstanding job tonight, Dan. I appreciate it.
It's good. I'm out of my element. I'm in my parents' basement hanging with the salmonoids behind me, so it's got to make sure I'm on my game. I have one more question for you. This one's just for me. This is just for fun. You got the corporate experience under your belt. You're doing the sharing in the insurance game right now. Let's say those two things are off the table. I'll say too, like money's not an object, but you still need a job or a business or something to go do. But the world's your oyster. You can do it from Puerto Rico if you want. Drop everything today. What would you go and do tomorrow?
Wow. So I don't know where the money part comes in yet, but if money was the no object, would love to take up sailing, get a catamaran, and go just cruise around the Bahamas and visit all points therein. And
I feel like you could be like a trip. You could like be a trip leader. Be like a youth group leader, but you'd be like a trip leader.
There we go.
Come with me.
Lead excursions. I can take people spearfishing and show them how to catch lobsters. So
there you go. Yeah, people would pay big money for that stuff.
So flip the conversation around since you put me on the spot. So what's yours? What would you do if you weren't doing the podcast and bookkeeping? And
I like hunting and fishing is my jam, and so I'm inclined to say that I would hunt and fish for a living and take people out hunting and fishing for a living. I think money's no object, so I can do that. I think I got to find the sweet spot though. Like I think about this a lot because part of me is like, why don't I do that? I freaking love being outside and I love the experience and the adventure of it. but I especially like cooking it. Like that's what sold my wife on me, was like me cooking wild game for her. It's super fun to do. And there's like another level of pride. Like cooking's a blast when you make something great, but when you killed it, when you gutted it, when you dragged it out, when you butchered it, when you processed it, when you put it in the freezer, when you took it out and you're like, this is that muscle from that deer that came with this experience, and I'm doing it just like this, and here's what we're going to make with it. Like every part of it, nobody else has touched it. And there's just this weird like pride element to it, and it makes it taste better, even though it definitely doesn't. It's not that it tastes better, it just tastes better.
Right.
So I think I would like professionally give people that entire experience somehow, like from I'm going to teach you how to bow hunt to I'm going to teach you how to gut this thing to you're dragging this thing to we're going to process this thing, and I'm going to teach you how to cook it. It's going to be like an immersion. You're coming with me for 3 months in the fall, and we're buying tags and we're going out and blood, sweat, and tears. We're going to go do this thing. I think I'd find a way to make that a business. It'd have to be, I think, business. Sorry, this is way longer than answer than you needed, because I'm just thinking through it right now. I think it would have to be a very expensive service. You'd be like, this is going to cost you $50,000. Like, we're going all in. This is a lifestyle experience. I think I'd charge a premium dollar, and it wouldn't be like a guide service. It'd be like an immersion service.
There you go.
We're going deep. You're living with me. And by the way, Crosby's diaper needs to be changed, and he wants you to hold him over by the bear so he can roar at it. You know, you come with the whole thing. You're here, man. You're part of the family. You're part of the experience. I don't know what to tell you.
So what I hear from that is, when stuff really hits the fan, I'm heading to the Plata household.
Yeah, so I like, well, if shit hits the fan, I'm probably not going to be there. I'm just be like, I'm living in the woods. I'm going out in the woods.
What woods? I want to know where he hunts.
But all right, my wife keeps asking me, where do you hunt?
A little bit of everywhere. So I grew up in central Wisconsin, which is like I'm kind of in north central Wisconsin right now. I grew up in central Wisconsin, so I go back home and hunt with my folks a lot. My mom deer hunts, my dad deer hunts, my brother deer hunts, my nephews deer hunt. My wife hunts. She shot her first deer with the bow this year.
Oh yeah,
we didn't get it. So that was like, it's the worst part of hunting, when you shoot something and you don't recover it, and you're just like nothing goes to waste. It probably perished, and a bunch of coyotes and birds and everything else, is better for it. But as a human, you just feel so shitty about it. It's like crazy how sad you are about it. Yep. But so it's very much like a part of our thing. We live in the Twin Cities, so I hunt Minnesota a lot with some friends and family over there. And then every year I try to do like 1 or 2 hunting trips. So last year I did Kentucky and Illinois whitetails. Kentucky in like early September, Illinois in November. This next year, my buddy and I are trying to go out to Utah to do an elk hunt together. We have no idea what we're doing. Never done it before. We're just like, let's go get a tag. One kind of like outdoor advisor dude was like, hey, since you guys have no idea what you're doing, maybe don't like wait until you draw a really good bull tag, like a male elk tag. He's like, why don't you go just like buy an over-the-counter cow elk tag and just like go see if you can even get close to one of these things. Like, the worst would be you draw an awesome tag and it's $1,000 and you have no idea what you're doing, and you just go and burn a really expensive tag and screw up time and time again, and then kick yourself because you're like, man, if we just would have known how to do this a little better, we could have got one. So he's like, go like cut your teeth with the over-the-counter non-coveted tag and go get some experience first. So I think we're going to go do like a week and a half adventure out in the mountains somewhere, and try not to die, try not to kill each other. That's a big effort when you're on a hunting trip with like 1 or 2 other dudes, is how do you not kill each other? Because you just get so annoyed with each other after a while. So gotta start messing with that. Fill the freezer up with some bigger game. We'll see.
Outstanding. That's awesome, man.
Maybe it is. I don't know. Maybe we'll kill each other. Maybe it won't be awesome. Maybe I'll be looking for one of those life insurance policies. Like,
well, then you got the term policy, so you're good.
That's right. At least for a little bit yet, until I'm like, kids, you're 12. I'm canceling my term policy. You're on your own. You're damn near a teenager. You could take care of yourself. Well, Josh, I appreciate you coming on and hanging out and teaching us all about it. I definitely I was in the dark on the sharing. So like just flat out, I was totally in the dark on it, and I'm happy to know about it. I'm so happy to know about it. I kind of feel like I'm on my wife's insurance policy, but I'm like, is it really a good deal? I'm questioning it. Might have to hit you up, see what's going on. But I appreciate you educating the rest of us. You guys, if you're interested in checking out what Josh has got going on, it's ROC Health Sharing. That's ROC healthsharing.com. Go scope them out. Go check them out. And if health insurance is or health coverage, I feel like is good. Then it kind of covers it. If you guys need health coverage, go check that out. Go talk to Josh. Whether it's for you as a small business owner, whether it's for your team and your employees, or your spouse, or just somebody that you care about, anybody. Shane Michael chimed in here. He says, "My lady is older than me. I need to be on hers." LOL. Yeah. Get covered, Mike. But yeah, guys, check Josh out. Josh, any closing comments and any final thoughts to leave us here with on a Wednesday night?
No, I would just say appreciate the opportunity to come in and chat with you, and hopefully folks got some value. And like I said, if there's anything I can do to help anybody out, or just answer questions, provide feedback, happy to do so. And you all got my contact info and cell phone, so here if you need it.
Sweet. Jai, producer man, will grab your cell number and put it in the show notes too. So if you guys are catching this later on the podcast, drop down in the show notes. We'll have the link there for the website. We'll have the Josh's phone number on there if you got to give him a shout and hit him up with some questions. So go get him. Josh, thank you much, man. Business nerds, you guys know what to do. Work smarter and harder. Go earn yourself some pride. Good night.